Most people know the story of a flight of a butterfly in Africa leading to a tornado in Latin America. And that's very much what this is about.
One of the big costs of interconnectivity is the exposure to the volatility that markets bring.
We need better multilateral governance. And if we don't get it, our children and our grandchildren are going to pay the cost of that.
The IMF has to catch up with his time. The institution has been founded 60 years ago, more than that, and not surprising that finally a lot of things has to be done to adapt.
At Bretton Woods, New Hampshire, delegates from 44 allied and associate countries arrived for the opening of the United Nations Monetary and Financial Conference. To be discussed are plans for the stabilization of world currencies.
I think his hope and aspiration was for the world to live in a more cooperative and collaborative framework, for problems to be solved jointly, and to resist the temptation of countries pursuing national agenda at the cost of the global agenda.
They were really trying to design a durable system which would have a lot of stability built into it. And to do that, they felt that they needed to really constrain the freedom of flow of capital and markets.
Today, things are instantaneous and of extraordinarily big size.
What happens in the US market or in Europe can have devastating effects on farmers in Africa or miners or indigenous people in Latin America.
These interconnections do many good things. What we did not realize is that, when something is good, there might be a bad side to it, and the crisis has shown that the bad side could be quite substantial.
So there wasn't enough of an understanding of how cascading failures in markets that weren't very well understood could bring the global economy to its knee.
I had here at my office forecast showing that situation is going to be very bad.
The Davos 2008 World Economic Forum meeting in Switzerland has begun.
When I went to Davos, and I think what's just fair to say, our view is that the situation is going to be very bad and at such a level and a global level that we need a global stimulus. What is clear is that there will be a serious slowdown and it needs serious response.
I think the speech from Strauss-Kahn at Davos did present a new face for the IMF, simply because you had somebody at the very top saying these things.
People look at me as if I was just coming from planet Mars or so. And I remember it took a long time for them to accept. 3 months later, in April 2008, we had here in Washington the spring meeting that we usually have every year. And I presented my forecast, and they were all totally upset, the finance minister saying, you're just joking. Well, they didn't say joking because it wasn't funny, but they say, we know our economy better than you do. It's not going to be that bad, of course, not going to be very good. We're not going to be that bad, you're totally wrong, and so on.
I remember being at the annual meeting at the beginning of October of 2008 and seeing people from different countries come together and recognize that they were sharing a very big problem. By Monday morning, the market had clearly a signal coming out of Washington that global policymakers get it, that they will do whatever it takes to stop this paralysis, and that there was also recognition that once the crisis is handled, we're going to have to fix the infrastructure.
Good evening from the G20 summit here in East London. After coming together to try to forge a global response.
The G20 in London was really an unprecedented event where you had 20 of the world's leaders coming together and agreeing over $1 trillion of additional stimulus to the world economy. There is something about crises that force people to overcome their differences and come together to solve a collective problem.
There was this very nice coincidence of the G20 existing as a structure and the IMF being eager, willing and ready to help.
What has been done by central banks, by governments, on the monetary side for the first one, on the fiscal side for the latter, has avoided a possible catastrophe.
The London meeting became the vehicle, in a sense, by which the heads of states basically revitalized the IMF as a multilateral institution which could provide a collective response.
It's very clear that the emergence of the G20 now is a direct recognition of the importance and the weight for global economic recovery of the growth of these emerging economies. So the Brazils, the China, and India and others that are really more or less backing the whole recovery process now.
The G20 summit trebled the IMF's resources, and that trebling included a $50 billion allocation for low-income countries.
It's the first time in history, really, as far as I know, that facing the same problem, such a large amount of countries decided at the same time to put in place the same kind of policy. And for this point of view, it is a very important point in the history of multilateralism, because it's really the first multilateral action of this magnitude.
The G20 has its problems, the IMF has its problems, but more and more people in an interconnected world understand these institutions provide a vehicle where we can at least hope for progress.
The IMF was viewed with genuine repulsion. It was the bank of absolute last resort when the state and government had failed. You called in basically these economic thugs who imposed a diktat.
Dialogue was not part really of the way that the IMF dealt with Africa then. So most countries, including Tanzania in this case, felt it's a bitter pill that they had to swallow.
When the economic crisis happened, the IMF itself had to change radically because the prescriptions had failed.
What I guess we have learned as IMF a lot is that even sound economic advice that does not factor in political and social considerations is not going to work.
The Tanzania conference was called as a part of, I think, a consultation process that the IMF was having with different parts of the world. Africa came to that event with a very clear set of asks.
We had expected that this would be a meeting that would allow the voice of Africans to be heard.
If you had failed regulation in the order of magnitude that you've seen in a country like the United States, if that had been any African country, the IMF would have been all over you like a ton of bricks.
I've been to a number of these type of meetings in my professional career. That meeting was very candid. We expected IMF to change. And at that meeting, we really had a very good conversation exactly on these issues. I think IMF has come through with most of what they promised they would do in order to change, introduce greater flexibility in the way they dealt with, really work in a partnership framework, which I think for most countries it has been clearly the case now.
When I talked to African finance ministers in that period, their attitude to the IMF was completely different. They saw the IMF as an organization that was there to help them in a time of crisis rather than to beat them down. And the stigma that I think many Asian countries felt after the Asian crisis, when they felt that in their time of need, the IMF made it harder for them, I think that stigma shifted in this crisis, where many countries felt that in their time of need, the IMF was there to help.
Let's be frank. After the memories in Asia of the Asian crisis, the memories after Latin American crisis in South America, Latin America in general, the fact that it was difficult for the IMF to pretend to be really the global institution representing universal membership and so on, I do believe that it's behind us. I don't believe that this wish that I have, of this dream of a coordinated economy, will appear overnight. But I think that we are making progress in this direction.
Good evening. After 18 months, Britain today finally dragged itself out of recession.
A handful of earnings reports help to revive hopes the economy is improving and
As the financial crisis calmed down, we have seen countries pursue national agendas that are inconsistent with other countries' national agenda. And as a result, the global economy is now struggling, the recovery is losing momentum, and financial markets are getting nervous again.
And it's clear to us that the solution is not a national solution, it is a global solution. So the job of the IMF is to find the solutions which make everybody better off, show how it can be done, and then push it, argue, try to convince the G20 or governments in general that that's the way to do it.
We need an institution to be where people worry every day about this issue, where this is their job, that they wake up worrying about it, they go to sleep worrying about it, and they continuously implement it, because that cannot be done at a national level.
The purpose of the institution is to help the leadership of sovereign states communicate with each other and sometimes tie their hands a bit and bring along their citizens for the greater long-run good of everyone.
I think that's a worry, that you won't see big changes without a real change in the policy making and thinking of a lot of the governments that own the IMF.
The IMF, they were part of the problem. The great struggle now is to ensure that they are part of some solution. If it must be more proactive, it must be literally the listening bank.